Hello traders, welcome to my video today, and the topic of today is the euro again. It's a fantastic currency at the moment, and so it's moving really well because of a variety of reasons. We're just under the 116 mark as per today. Our standard disclaimer is that FreeFX is an educational resource and all information analysis shown does not constitute trading advice. Trading foreign exchange carries leveraged risk and the possibility of financial loss. Remember, past performance does not guarantee future success. My name is Francesco. I'm the founder of FreeFX, and I would like to introduce today's topic. So first of all, let's go to our charts, and I have quite a few things to show you, but I'll try to be as quick as possible. So let's just start with the first thing, the Barchart commitment of traders charts, and I'm going to show you the 6-month view, which includes obviously all the standard graphs beneath. What's interesting is that we're just under 116, as I said, and this is a 4-month high. You can see in March that we were just about this point. Our high was nearly 1.15. Now we've actually surpassed that, having dipped all the way down to this point at 106.36 more or less, and we've come all the way back up, and then we sort of came a cropper in June, couldn't get past the March highs, and now we've gone well past that. So we're on to something here because the strength is behind it, so we can expect this trend to continue. Also, the asset managers have kind of picked up since the middle of July, kind of a step higher. And if you look further down, you'll see obviously that we have a variety of elements that come to the rescue for this currency. And what I'd like to go to then is the next chart, and the next chart is obviously, oh yes, here it is. Just want to mention the leverage funds are still below zero, but the asset managers are also picking up, just like the large speculators here at the top. So let's move on to another chart. This is the open interest heat map from CME Options. Different date groups for the option expiries, etc. But what's interesting is that I was talking a little while ago, if you remember, about 114 being a very strong number. We're at close thing to 6,000 contracts. 115 quite low, but in the next lot of calls it's actually up to 3.3 and on further down the year. There aren't really many strong levels where there's a lot of buying interests at 115.50, 116. So the next one we can see is really 118, but there's nothing much in between, which kind of creates a bit of uncertainty in my mind as to whether the 116 is not seen as attractive. There's a huge gap between 115 and 118, and I do wonder why that is. So we might have to sort of finish on that note, because that is quite a difficult one to fathom. But here is the futures, just to finish the CME FX futures for euro. You can see on the hourly chart in the last few days, that was the 16th of July, lots of buying. Then on the 20th, start of the week, lots of buying, but not much effect. Things really kicked off from Tuesday. Huge amount of buying and lots of movement from the mid 114s to past 115. That consolidated, that move was essentially confirmed the following day on Wednesday, and then today, the 23rd, again lots of buying on the hourly, and that move was pushed even higher to 116 and just slightly beyond. We just retraced that, but we're still actually almost above yesterday's highs, or just about. So it's looking very positive for the euro. That's what I'm going to say. So here we are, and what I was going to say was that that gap between sort of strong buys at 114, 115 in options for the euro and sort of 118 or beyond. Made me think about the sort of longer term view. Obviously, it's very dangerous to go into longer term view when you're trading just daily or intraday or whatever. So, but anyway, I thought about the long downtrend. This is on a monthly chart, so these are huge ranges, right? It's like 157. 127, that's like 3,000 pips kind of range. But anyway, I made a sort of parallel trend lines channel, and you can see on this channel starting here in 2008 with the great financial crisis, when the price dropped like a stone, and then up and down, and sort of more or less continuing and kind of confirming these sort of lines through time. That if you extended them, see they'd actually come true, and quite to the last pip, but even so, that's 124, and the line there falls just about 127. It's 300 pips, but on such a big scale, that you can kind of make allowances for that. So what's interesting is that we're at kind of 116 here, and this line will fall just about at the moment 119. But obviously, if you continue down, it'd be like 118. Something, so we're not too far from it. So I'm wondering if in the greater scheme of things, although you can see though, there's quite a zigzag movement, and then there's a long period of consolidation here in kind of 2015, and then this kind of almost following the middle of this channel area here in sort of 2018 onwards. We have picked up, but we have to think about as well this kind of maybe 119 or 120, whether that's anything particular. It's really hard to see that there's anything kind of resisting this, actually breaking past this and going. But the high that we see here is 124. That's from kind of January 2018. So I suppose we could say that at least we might get to 120 or even 124, and then maybe come back. Remember, this line represents the close, not the actual. If you actually sort of looked at candles, you might have a different view, so I'll just show you that and see what the monthly looks like. So yeah, you can see that there are some wicks here, kind of extending high, and then the close is a bit lower than what I said. But anyway, this was an interesting proposition. Just wanted to show you that. And with that, we are going to close today's video. And I just want to say thank you for watching, and please subscribe or like my channel. I really appreciate also any comments that you might have, and I'd be very happy to respond. Take care, stay safe, and see you in the next video. Bye.